Money is the root of all evil, or should that be the lack of money is. Cash talks. Money can't buy everything. A penny saved is a penny earned. A fool and his money are soon parted. Money makes the world go round. Or as all of us in real estate have been saying for the past 3 years, ooh, I'm having an out of money experience. This week we explore money issues and loans, and there are many more ways to screw up than you can imagine. Now the music you'll hear is courtesy of Three Fools on Three Stools, and that's an apt name once you get to know them. They're one of the local Fort Worth bands we enjoy at Central Market that I told you about a few weeks ago in the video about how having fun can make you money. Come on out and join us sometime. So with no further delays, here we go with Fool number 4 coming out of chute number 6.
Slowly rolls the river, rolling to the sea, like the spirit of a woman, forever wild and free. I met her by the water, and there I made my plan. I would win her love forever.
Oh hi, got time for a short but very important video this week. Now we've been working with a buyer who has almost no money in the bank, with most of his money being hidden under a mattress, and I mean that literally. I thought you might be interested in some of the issues we've encountered, as well as some of the solutions. Now unfortunately, this isn't the only issue that money creates. We see money issues on many loans, not just with mattress money. Now since 9/11 and the Patriot Act, it's become very difficult to use cash in any portion of a real estate transaction. Now they want to know the source of all visible monies, whether it's cash or not. So a deposit in a bank account can cause major issues, even if it's not being used to buy the house. Now I'm sure you've seen the movies that banks have to report any deposits or withdrawals of $10,000 or more. But did you know that lenders have to track any non-payroll deposits of $1,000 or more? This means you might run afoul of all the new money rules even when your buyer looks golden and has all their money in the bank. As a matter of fact, that's when it happens the most. Now, as you can see by this scary form, the buyers have to sign. The FBI is the entity that does the investigations. That's their logo. Let me read this to you. Mortgage fraud is investigated by the Federal Bureau of Investigation and is punishable by up to 30 years in federal prison or $1 million fine or both. The Patriot Act disclosure begins this way. To help the government fight the funding of terrorism and money laundering activities, federal law requires. So this is what requires us to source and track all monies that is visible, and this is who investigates it and punishes it. Well, the long and the short of it is you simply do not want to violate the money rules. Now keep in mind these are federal rules and not individual lender rules, so they can't vary by much at all. What little bit they can vary is determined more by what we can prove about a borrower's circumstance. So the basic rule, regardless of the loan type, is that we have to be able to prove where you got the money to buy this house. Now underwriters worry that any non-payroll deposit could be an undisclosed loan, an undisclosed gift, or maybe even drug money. You can understand that an undisclosed loan could make a difference in whether someone could qualify for a home loan because the buyer would have a payment that hadn't been taken into consideration when they qualified. But what difference does a gift make? I mean, it shows you have a supportive family or friends, doesn't it? Well, yeah. But they've also based their approval upon the fact that with your old bill-loaded income, you've been able to save all the money you needed to buy this house and have your reserves. So if you could manage to save money while paying the old debt, which is probably a much lower house payment, how are you going to manage your money well enough to make this new higher house payment? Now the term drug money has been used in the past more as a joke to cover the issue of unreported incomes, but not any longer. When the DEA seizes assets, they also seize the house, so the lender's left with a mortgage on nothing. This is a lot more prevalent on rental property than owner-occupieds, but it happens on owner-occupieds a whole lot more often than you think. Now, a person's loan approval is based upon their perceived ability to make a long-term house payment. So, if their savings pattern varies, or their bill load differs, and do remember this FBI disclosure here, and the penalties that go along with it, or jail time figures into their future, then odds are they probably won't be able to make the house payments regularly. Now, will they? First, let's look at the $1,000 rule, because that's the one that's going to get you the most often. On one hand, I don't agree with it, but on the other hand, I can understand it. And on the other hand, wait, I don't have any other hands. It's just the rule, and you have to learn to live with it. I don't agree with it because it seems too much like Big Brother sticking their nose in our business. But what if that $1,000 plus deposit really is an undisclosed loan or someone helping out? Now, if I was an underwriter and I didn't know the source of those funds, it might totally change the way I'm looking at that borrower's file. Maybe for the better, maybe for the worse. But keep in mind, an underwriter is paid to be negative. The underwriters don't really see people. They see situations, paperwork, boxes to check. It's our job to make them see people and understand the situations. And that's the difference between a good lender and a poor one. Or another way to say it is the difference between an approval versus a turn down. But Mr. and Mrs. Builder, never, I repeat, never let your buyer pay earnest money, a deposit, or upgrade money in the form of cash. That is, unless they don't want credit for it. We have got to be able to prove they actually paid you that money for them to get credit for it at closing. And we can't do that in cash. You're the professional. You're supposed to know these rules. Now, the same thing goes to your realtors. No earnest money in the form of cash. It's okay to pay for an inspection in cash because they don't get credit for that at closing. We've also got to prove that any checks they give you guys cleared before they get credit for any of that money too. So be very careful about asking for last-minute funds. Can we show that's been cleared? Basically, we got to prove that money has actually changed hands. And also, if money shows up in a borrower's bank account, whether it's important to loan or not, they've got to be able to prove where it came from, and you can't do that with cash. Now, if the money for that non-payroll deposit came from the sale of property, you just need to document that. We'll need proof of ownership, a bill of sale, proof the buyer gave you the funds, and proof that's the money you actually deposited. For instance, on a car, you'd copy the title, write up a bill of sale that both the buyer and the seller would sign, make a copy of the check they gave you, and then a copy of the deposit ticket. Or you could give us a bank statement showing the wire transfer on there. It's very simple to do at the time, but it's difficult after the fact. Now, all of these rules I'm giving you are some very basic rules you should know so that you can make sure your buyer doesn't inadvertently cause the whole deal to come crashing down. Now, one thing that isn't always so easy to document is transfers of money from one account to another. And a common thing we see is a direct deposit paycheck followed by a transfer of a portion or all of it of the funds to another account. Interbank, that's not too hard to track, but if you transfer it to a different bank, it takes a lot of legwork to prove it up, especially if the amounts don't match, such as when you leave part of the funds in the first account or take some cash out for yourself. But regardless, no matter what, never transfer funds in the form of cash. There is no way to document that. Now let's go back to the mattress money. Cash on hand and no rental history, as in they're living with mom and dad, is the toughest combination. With no rental history, we also have no way to tell if they have the willingness to pay the house payment. It also gives a huge payment increase, which means they better be able to show they've been able to save more money than normal. But wait, not being able to verify their money was the problem in the first place. So what are some solutions? Here's one, Plan A. Here's a solution that works under any circumstances for any loan type. Simply put their money in the bank and let it season for long enough for them to get 2 bank statements, and then there are no issues. When I have time for that, you'll proceed straight to Plan B. Now here's Plan B. You have to follow the federal guidelines for each loan type. I've put all the present day guidelines right below this video so you can point the buyer to them anytime you have this issue. But let's start with conventional loans. Cash on hand is never acceptable on conventional loan, which takes you right back to Plan A. Cash on hand is acceptable on USDA loans if, and let me read this to you. Cash on hand is acceptable if the following can be documented. Analysis of discretionary income through a household budget supports the ability to accumulate funds, and cash is a way of life for the borrower, no bank account, and can be documented with receipts that reflect where the cash is used consistently to make household payments, i.e. rent, mortgage, utilities, etc. Cash on hand is also acceptable at FHA under very similar terms. And I got those exact terms right down here below the video. Gifts are allowed on both USDA and FHA loans with several very similar stipulations, and both of those are down below as well. Now, once again, let me mention the one sure way to ever use cash on hand is to put it in the bank and let it season. Unfortunately, that usually takes 45 to 70 days. So, the minute you find out you have a borrower that wants to use cash for any portion of the real estate transaction, you need to begin working on a legal solution to bring that money in the transaction. The proper solution depends upon their situation and the time we have before closing. And this is one of those times when it really benefits you that we've got multiple secondary market sources for money. Okay, so this didn't end up being as short as I'd imagined it to be, but that's because there's lots of ways money impacts the loan process. But we've been in this business for 38 plus years, and we've learned most of those ways. So the way to make sure your loan transaction goes as smoothly as it can is to call us early and to call us often. Lenders don't control the rates, nor do we control the closing costs. All we bring to the table is our vast knowledge and our willingness to do more work than the other guys. So till next time, I'm saying adios, and let's listen to a little more music from those fools.
Each day I came to meet her, and slowly I could tell the current that was pulling me was moving her as well. I wore down her resistance, she gave in to my demand, and beneath the summer moon we made love in the sand of the Rio Grande.